Ladies and gentlemen, welcome back to the channel. Tesla stock today is down 3.5%. The broad markets are selling off today. Russell down 0.5%, NASDAQ down 1.3%, and the S&P down 0.73%. Here in this video, we're going to explain what's going on, why stocks are quote-unquote crashing today. Almost feels like Tesla is crashing. I use air quotes, crashing for no reason. Okay, we'll explain what's going on, what the news is, and why this is happening. We do also have some big news for Tesla stock specifically. Tesla has launched a new product to the market. We'll look at the option activity, the news flow today, besides this big news, as well as what the short sellers are doing in Tesla stock. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. Again, guys, we are massively outperforming Wall Street this year. Portfolio is up 79.39% in this portfolio, okay? Which I believe this is only going to get crazier in terms of an outperformance into the end of this year. We are outperforming 99% of hedge funds and institutions this year. What we're doing is going out and finding small cap AI stocks that nobody else knows about. Why AI? Because AI is going to be the big theme that hopefully gets you rich over the next 10, 20, 30 years. You want to capitalize on this, but you also don't want to buy the hype. You don't want to buy the stocks that everyone knows and loves. You're not going to get the outsized returns that you're looking for in those names. We're going out, we're early, and investing in the high quality small cap AI stocks before Wall Street understands the opportunity. Okay? If you guys want to come join us, link down below in the description of this video. But with that said, let's get into today's episode. Okay, so the first thing I want to tell you, let me speak to you, my fellow brethren, okay? None of this matters. Let's just be honest. As I've talked about before on this channel, the next 5-ish weeks are going to be on the weak side. This is not going to be a blistering rally over the next 5 weeks, okay? It's going to be slow. Any slight reason to sell stocks, Wall Street is going to take advantage of that. Why? Because you are in a period of seasonal weakness. That's the facts here, okay? So I don't really care what matters or what happens in the next 5 weeks. It doesn't matter, okay? As long as you're not seeing any material change, right? What does that mean? Well, if we start to see the economy is crashing, if we start to see that trade is not going in the right direction, that trade deals are getting further from being completed, which is not happening, but if that starts to happen, if we start to see inflation that is skyrocketing or something like that, that would be something to pay attention to. But if we get one-off headlines like we're getting today, slight things here and there that tank markets, I don't care about that. I'm looking through that. That is essentially, let's use the words, quote unquote, transitory, okay? Because you're in the seasonal weakness. A piece of news that Wall Street really wouldn't have cared about 2 months ago could now be something that Wall Street cares about. And honestly, Wall Street didn't care about this news when it came out months ago, but they care about it today. Let me give you the news and what is driving stocks lower today, okay? You might laugh at this. It says retail panic. What the end of the Deminimis exemption means for brands across the globe. The Deminimis exemption, which allowed shipments valued under $800 to enter the country duty-free, came to an end globally on Friday. The provision had been slated to end in July of 2027, but an executive order from President Trump eliminated it much sooner, giving businesses, customs officials, and postal services less time to prepare. Companies big and small have used the exemption to save money on digital fulfillment, and change could lead to higher prices. Small business owners on Etsy, eBay, and Shopify, for an example, relied on the provision to support their marketplace businesses. there's something big you need to know here. Okay. Back in May, when stocks were freaking out, Trump ended the exemption for goods coming from China and Hong Kong. And on July 30th, he expanded the rollback to all countries, calling it a catastrophic loophole that's been used to evade tariffs and get unsafe or below market products into the US. Okay, so this de minimis exemption ended in China back in May. Where do you think a lot of the de minimis exemption was actually coming from to begin with? China. So the brunt of this has already been realized. A lot of the lower, cheaper price products, think of Shein, think of Temu. You know, a lot of people these days, if you know anyone that vapes, right? There's a lot of like vape products that are no longer available in the US because of tariffs, because of this de minimis exemption being withdrawn. Okay. You've already seen the effects of this. There's not a lot of de minimis products coming from, let's say, Europe, right? The euro is more expensive or valued higher than the dollar. Like, there's just not much of that going on. Okay, so ending this now is like, again, we've already reacted to this, but because there's this seasonal weakness, it's giving people a reason to sell stocks. Okay, it says here, the de minimis exemption had previously been slated to end in July 2027 as part of sweeping legislation passed by Congress, but Trump's executive order eliminated the provision much sooner, giving businesses, customs officials, and postal services less time to prepare. The ending of that under $800 per person per day rule from a global perspective is about to probably cause a bit of pandemonium, said Lindley Brown, a partner in the global trade division at accounting firm EY. Quote, there's a financial implication, there's an operational implication, and there's peer compliance, right? Like, these have been informal entries. No one's really looked at them. It says already the sudden change has snarled supply chains from France to Singapore and led post offices across the world to temporarily suspend shipments to the US as they can ensure their systems are updated and able to comply with the new regulations. It says, quote, obviously, it's a big change for operating models for companies, not just the Sheins and Temus, but for companies that have historically had e-com and brick and mortar stores. Okay, it says the end of de minimis could cost U.S. consumers at least $10.9 billion or $136 per family, according to a 2025 paper by Pablo Falbum and Amit Kandawal for the National Bureau of Economic Research. This literally doesn't matter, okay? Sure, like, is there some impact? Of course. But it's so minimal. Like, is this going to be the thing that tips the economy over the edge? No. It says here, a 2023 House report found more than 60% of de minimis shipments in 2021 came from China. Ding, 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 ding. Okay. As I said previously, you've already seen the vast majority of the impact of this. I would say, again, that was back in 2021. 60% of the de minimis shipments came from China. I would say, like, up until May, it was probably like 70 to 75% of the de minimis shipments came from China. Like, that percentage definitely went up since 2021. So you've already felt the brunt of this. Again, these kind of things you just kind of have to look through. You can't read too much into it because in terms of a market reaction, like, it makes no sense why Tesla's down 3.5% on this. It makes no sense why the NASDAQ of all indexes is down, 1.5% on this news. Like, it's seasonal weakness. That's it. Now, again, indexes are responding poorly today. The VIX is up 7.5%, okay? But there's two components to this. There is the hit on growth that you could see from de minimis being, withdrawn globally, okay? Again, this happened to China back in May. The brunt of this has already been materialized, okay? Important to remember. But to figure out if markets are more concerned about growth slowing down or about inflation implications from this, you got to look at other assets. First, bonds. Bond yields are up 1.5 basis points today. 10-year Treasury yields are at 4.22%. Okay, they've come down and you're really not seeing a spike today. So what does that mean? It means that bond markets are not too concerned about this from an inflation perspective. Okay, oil is down 1% today. Oil you can kind of think of as an economic barometer. Okay, on any given day when news comes out that's affecting the markets, you can look at oil and get some kind of interpretation to what this actually means for the market. So for an example, oil down 1% today presumes a slightly weaker economy. Okay, so from a market's perspective, the markets are looking at this de minimis exemption, again, being thrown out for all countries, as it could hurt growth. Hence, oil down 1%. But it's not like a huge deal, okay? If this was really like a big deal for the economy and for growth, taking a hit, oil would be down more than 1%. So based on the bond reaction, based on the oil reaction, I can firmly say today's sell down is an overreaction to this news, to say the least, okay? Again, seasonals. You kind of have to really like pick and choose what news you give credit to or what's really important, because any slight bad news could just send the NASDAQ down 1% just because you're in a weak seasonal period. Now, we also had economic data that came out today. The economic data actually was fine, okay? Pretty much came in line with expectations. Core PCE month over month came in at 0.3%. That was the estimate. So you didn't come in on the low side, but you also didn't come in on the high side. Personal income month over month came in line with expectations at 0.4%. Personal spending month over month came in line with expectations at 0.5%. The goods trade balance came in at negative 103.6 billion. The estimate was 89.5 billion, so a slightly larger deficit than we were expecting. So that's definitely going to move estimates for GDP. It actually moved estimates up for GDP. Okay. So yesterday, the estimate was 2.2%. Today, the estimate is 3.5%. Okay. Now, this is important to point out, and somebody in the trading group also pointed this out today. It says here, the nowcast of third quarter real personal consumption expenditures growth and second quarter real gross private domestic investment growth increased from 2.2% and 4.4%, respectively, to 2.3% and 6.1%. This second number, very important, okay? And there was a lot of questions today what this actually means in like simple terms, okay? The second quarter real gross private domestic investment growth. It increased from 4.4% to 6.1%. What this means, to simply put it, is companies are investing, okay? Domestic investment growth. Just think about that, okay? Private domestic investment growth. So there's a lot of things that go into a GDP report, okay? The goods trades balance, as an example, incomes and personal spending and all of this, okay? But one of the best metrics to look at is, are companies investing? Okay? And the answer is they are investing aggressively. Why is that important? Well, I'm actually watching the drama documentary on Netflix right now called Titans of Wall Street. Like, from the 1800s through the early 1900s, it's a fascinating like short series on like JP Morgan and Goldman Sachs and some of the feuds they were having and the starting of Wall Street firms, okay? And like some of those panics, like the Panic of 1907 and, Great Depression even, and some of the earlier panics, what it did was it stopped that domestic investment. Okay, some of those panics back in the day, and that's where you get larger problems. Okay, I bring this up because no matter what the data says for goods trades balance or this metric or that metric, what's really important are companies continuing to invest or not. And they are. Okay, so yes, GDP went up a lot today. What's also interesting is with this Deminimis news today, the odds of rate cuts actually went up today. Because people are like, oh my gosh, is this going to hurt growth? Okay, well, it's not. Companies are investing aggressively in America right now. So the odds of rate cuts yesterday was 82.9%. It went up to 84.4% today. Okay, so today you actually, in my view, stock should probably be trading higher today. Okay, you probably shouldn't have a red day today. So again, it's seasonals. There's some weird shit that goes on during this time of the year. People are out on vacations. Nobody's really in the office today. Interns maybe. Sure. But is Wall Street really paying attention to the markets today? No. That private domestic investment growth number also says, again, companies are investing in America aggressively, but what it means to me is down the line, growth is going to improve and get even better. Because if you're investing today, you're not expecting to see a return today 9 times out of 10, right? You're investing for the future. So that likely just means to me, you're going to see a lot more investing and a lot more growth into the future. One of those areas in which you're seeing a lot of that growth is AI. And that is an opportunity that you do not want to miss. That's why we started the trading group, so we do not miss it. Again, if you want to join it, check out that link down below in the description of this video. And again, I just want to say that markets being able to take a red day, I think is actually a very healthy thing. It still shows there's a lot of bears out there, that people are not overly optimistic that they will look through everything. Okay, now, whether they react correctly or not, that's another question. Okay, is the NASDAQ being down almost 1.5% today the correct reaction to the news today? Absolutely not. Stocks should be green today. Again, Wall Street's not very smart. So stocks are moving lower. But that's a good thing, okay? That is a great thing. I love to see the markets that jump to the bearish conclusion first, that don't even look into the data, okay? Because if Wall Street knew what I was telling you, they would be buying stocks today. So this is a sign that this market has a lot of legs, okay? And again, the next 5 or 6 weeks are going to be choppy. Any slight piece of bad news is going to be over amplified, okay? But it really reaffirms to me that into the end of this year, you're going to have a very aggressive rally to the upside, especially in small caps, AI, financials, okay? Not necessarily the Mag 7 in my view. And then into 2026, you're going to have a very strong market as well. Now, here on the day today, the percent of stocks trading above their 50-day moving average coming in a little bit lower today. But in fact, the NASDAQ being down, almost 1.5% today is actually not a terrible day. You're at about 65% of stocks trading above their 50-day moving average. You're only down 1% today on this metric. So it's not like it's a bloodbath out there, but there are some definitely, concentrated red stocks. Now, the CNN Fear and Greed Index yesterday was 66. Today, it is 64. So moving down a little bit. Market momentum is neutral. Stock price strength, extreme greed. Stock price breadth is greed. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand is greed. And junk bond demand currently in extreme greed. We could see the most recent AI investor sentiment survey did show bearish investors fell from 44.8% to 39.4%. Neutral investors rose from 24.4% to 26.0%, and bullish investors rose from 30.8% to 34.6%. But again, I will point out, you still have about 5% more bears than bulls on this metric. Normally, the historical average is about 7.5% higher or 6.5% higher on the bull side versus the bear side. So you still need to go up like, what, 12%, 11% on the bull side just to get to a historical average. Not like a super bull market, not where everyone's all bulled up, but just to get to like an average, okay? There's a lot of bears out there. And the more bears you have, the longer the rally lasts, the higher the markets go. I know it's contrarian as hell, but that's how these things work. That said, Tesla's stock is down 3.67% at the time of recording this video, sitting at $333.28. But we do have some good news for Tesla to go over in this video, so let's go over it right now. I'll say first and foremost, Australians are jumping from autopilot straight to FSD V13. And there's a lot of videos coming out now where people are just mind blown how good FSD is, especially in a right-hand drive country. You guys got to remember, this is the first country that is right-hand drive that is getting FSD. This is a big testament to Tesla's software abilities with full self-driving. Like, Wall Street should take these things more seriously, but they're not. This just shows the exceptionalism with Tesla's product. And I would think it would, raise the odds that Tesla would be successful with robotaxi, although that's hard to quantify. It does raise the odds, in my opinion, that Tesla will be able to scale robotaxi on a global level. And that is the real big upside with Tesla. It's not deliveries, it's robotaxi. Okay, as I've talked about before, you do not make money based on what's priced in actually happening. Okay, you need a surprise to the upside always to make money. Okay, and I think Tesla's going to give us that. I think Wall Street right now is not paying much attention to robotaxi, but by about midpoint next year, it's going to be clear that robotaxi is starting to become a larger and larger business that is going to be around, that is going to be successful. And I think we probably get another city or two expanded into this year, and then many cities next year. And again, by about midpoint next year, you're going to see Tesla stock dramatically higher than where it is today. And I think that's a pretty safe bet because of how bearish Wall Street is on Tesla. Like, if everyone was expecting Tesla's robotaxi to do well, like, the opportunity would be a lot smaller than where it is today. But the fact that Wall Street doesn't even care about robotaxi makes me incredibly bullish. The official Tesla X account today posted this video from somebody in their Tesla just sharing the image of all of the cars around and the way the vision actually can, track vehicles and follow them and see so far, down the way. And Tesla posted this video and says pure vision beats sensors. There's been a lot of debate recently whether Tesla's approach is right or not, whether Tesla should have, LiDAR and radar and all these other things. And so far, Tesla is showing that camera only is, in my opinion, it's showing that's the best way to go. But it's going to take some time, and Tesla has to demonstrate this with robotaxi services that it is the best way to go. Now, mainstream media in Australia is commenting on Tesla's FSD supervised. This one individual says, quote, "To have this car drive me around Brisbane for an hour. We're talking in the city, motorway, spaghetti bowl of on-ramps. It handled it so well. It was mind-blowing. Now, General Motors' electric vehicle manufacturing plant in Detroit will partially shut down first and second shift production lines for 1 month starting September 2nd due to low demand. The production of the GMC Hummer EV and Cadillac Escalade IQ will be impacted, the company confirmed. This move impacts approximately 360 employees. And the bigger news today for Tesla is the new Model Y Performance is now available to check out in person at select Tesla stores in Europe. So yes, Tesla has now launched the Model Y Performance version. And, well, who knows how big of a seller this is going to be? Should be better margins, better product, should mean some good demand for this vehicle. Tesla has also introduced a monthly windshield protection subscription in the US for the Cybertruck for $35 a month. Now, in option activity today for Tesla stock from hedge funds and institutions, they are definitely not flinching much with Tesla down 3.5%. You have 137 different trades totaling about $80 million with a positive order value of 73%. So pretty positive for such a rough day. Now, if you look at today's expiration, you have volume of 61.44% calls, 38.56% puts. Now, if we look at next week's expiration, you have volume today of 56.06% calls and 43.94% puts. So people are still even betting that next week could be a pretty good week as well for Tesla. You do have 657,000 shares today that are being sold short. We have seen a recent rise in the short interest of Tesla. Again, keep in mind, whenever you hear, these anecdotes from myself that short interest is rising, things like that, keep in mind it is a weak seasonal period for the next, again, 5-ish weeks. So Tesla has a high beta. So if you're a hedge fund or institution and you're like, oh crap, well, the next 5 weeks could be a little bit rough. I want to protect some of the gains in my portfolio. Where should I short? And Tesla offers like that 2-to-1 ratio, right? Historically, Tesla is going to fall or rise about 2x what the markets do. I think its beta is like 2.2, but you get the idea. So if you wanted to hedge your portfolio, a way to do so would be to short Tesla. Okay, since it is, again, like 5% of the S&P and does have such a high beta. Short interest of free float is at 2.82%. You have $26.41 billion sold short in Tesla, totaling 76.34 million shares that are sold short. Shares out on loan at 14.54 million. So it's actually funny. Tesla's short interest has recently risen, but the shares out on loan, the amount of shares out there that potentially could be sold short has continued to fall. It's down 36.5% in the last 3 months. So believe it or not, besides just what I would say is a few individuals shorting Tesla, driving up the short interest of free float, there's not a lot of broad demand to short Tesla stock lately. So again, as kind of the synopsis to today, I don't think the de minimis exemption really means anything at all. We've already seen the broad impact of this. Probably, I would estimate 70 to 75% of de minimis exemptions came from China, and that ended back in May. So yes, there's going to be some small impact of this, but is it like, worthy of markets reacting to it? Probably not. What's happening is the seasonal weakness is just driving algorithms and people to de-risk in general, which you add a little bit of bad news on there and boom, you get something like this. I would highlight, though, the economic data today, specifically that private domestic investment growth number surging to over 6% is much better news. It shows that one-off data sets really don't matter. What matters is, are companies investing? And the answer is yes. So that's a pretty strong sign that the economy is doing just fine. That in the coming quarters, the economy will continue to do just fine. That is, of course, something that Wall Street is not paying attention to today because they are not the brightest individuals out there. Like, more than Wall Street. let me put it that way. So, yeah, today, doesn't change any of the thesis. Doesn't change any of the thesis on the markets, end of the year rally or 2026 rally. It doesn't change the thesis on Tesla at all. It's literally, today means nothing. I could care less that the markets are red today. I think they should be green today. But hey, you can only fight seasonal weakness so much. Hit that like button and subscribe to the channel if you have not done so already. Hopefully you learned something in today's video. Check out that link down below in the description of this video if you want to take it a little bit further. Come join us, come get involved with the community, come talk to myself and other members 24/7. Link down below in the description of this video. Keep in mind, I'm not a financial advisor, I'm not a financial planner, I make no guarantees. You may lose all of your money, blah blah blah. Read the disclaimers. Have a great weekend, and I will see you in the next one.